Hey you, yes you! Do you want to be a millionaire in the future? Well, then watch this video and understand these basic 10 rules of money. In fact, these 10 basic rules that all millionaires follow. And if you start following them right after watching this video, nothing is going to stop you from being wealthy. I'm not going to take much time, let's just dive right into it. Number 1. Avoid debt. This may seem obvious, but dodging any debt is certainly a habit that can help your overall financial picture. Outside of the mortgages on your home, make sure to reduce and eliminate all debt. If you want to build wealth, you cannot waste money on paying interest or consumer credit, such as credit cards and even car loans, Daugs says. Because most credit cards charge notoriously high interest whenever you carry a balance. Prioritize paying these balances off in full every month. Only charge what you know you can pay off and avoid store credit cards in general. Number 2. Buy cars and plan to keep them for long term. For the most part, cars depreciate in value the second you drive one off the lot. Daugs says his self-made millionaire clients typically buy instead of lease any new car which plans to hold onto it for a while. By keeping their cars long term, they can use the time between car purchases to save up cash that would otherwise go towards a monthly payment. Daugs further quotes that if you need to finance the car, pay it off as soon as you can and plan to keep the car long after the loan is paid off. Okay, so number 3 is having an emergency fund. Having a solid reserve of cash that you can tap into in an emergency goes a long way. If you have an unexpected expense such as an urgent car repair or medical bills, a rainy day fund that is immediately available for withdrawals can help you afford it. This way, you don't need to charge the expense onto a high-interest credit card or take out a personal loan. Most of Daugs' clients have 6 to 9 months of their monthly expenses set aside, but you should do what works for your cash flow, and know that any moment will help. This is one of the first steps someone should do in building a solid financial foundation. Next one, start investing today. Once building up an emergency fund, Daugs says his clients have organized investment plans, whether it's in stocks, bonds, or exchange-traded funds or ETFs. He suggests setting up a monthly or bi-monthly automatic transfer of cash from your checkings account into an investment account. This way, you can forget about having to remember to manually invest, and then you can learn to live on the funds you've available. Most of his clients do not miss having the money in their cash flow, and then they can use those invested savings for future car purchases, vacations, and other short or long-term goals without incurring additional debt. As a general rule of thumb, you should save at least roughly 20% of your income each month. This 20% goes towards your saving plans, emergency fund, retirement, and investments. How much you take out of your paycheck to invest depends heavily on your income and investment goals. But getting used to living without that 20% is a good start for both you and your savings and your investments. But one thing to remember that before you invest, make sure you know how much risk you can take on and the time frame for when you need the money. If you are in your 20s or 30s saving up for retirement, you can generally take on a little more risk in exchange for aggressive yields because you won't need your money for several decades if you plan to retire in your early 60s. For those in their 40s or 50s, their investment time frame for retirement is much shorter. Therefore, they are generally more reluctant to take on risk, so to better protect their money. Now, let us move further. Take advantage of everything your employer has to offer. It is worth looking over your employer's benefit plans thoroughly. Companies offer more than just retirement plans that can help you save money and even invest to earn more. Leveraging some of the below benefits can be helpful to you. If you can afford to do so, make sure you are contributing enough to match any employer contributions. The match is basically free money to you. Also, your employer's group plans can offer significant savings versus buying these insurance policies individually. If you qualify for an HSA, some employers will match your contributions up to a certain amount, so your contributions are tax deferred. See if your employer plans offer legal services. If you ever need to have estate planning documents prepared, such as wills or trusts, you can save money in attorney fees if you use the legal services offered in your benefits plan. Also, if your employer offers ESPP, you can typically put up to a certain percentage of your pay into this plan. Then, it'll allow you to purchase the company stock at a discount to the market price. If you feel good about your company and their stock, this can be another cost-effective way of investing to continue to build your net worth. Next up is, do not try to keep up with the Joneses. Keeping up with the Joneses is a typical way people dig themselves into debt. By living beyond your means, time and time again, eventually it's gonna catch up with you. When building wealth, fight the need to have the latest and greatest gadgets. So much money is wasted on constant upgrades these days and can cost you both money and lost opportunity. It's only human to want to compare your life to others, but take another look at your lifestyle and budget, focusing on what's most important for your own personal goals. These are your needs and wants that truly matter to your bottom line and happiness. Number 7 is to utilize tax deductions. When you can, try to minimize the taxes you pay. This includes finding some element of tax savings in everything from retirement plan investments to home mortgage interest, charitable contributions, college funding, and health savings accounts. Make sure you are participating in the plans and programs that can have multiple benefits. This is an area where it is helpful to consult a financial and tax professional. Next is keep looking for other income streams. If you observe most of the rich people diversifying their investment portfolio with other assets, such as rental properties that provide passive income, it is likely that the average person does not own multiple properties, but there are other rental opportunities that provide another source of passive income with little effort on your part. Some ideas include renting out a room in your house or apartment, or renting out your car while you work. Number 9. This is for those who have kids. Start saving for kids' college early on. College saving plans like a 529 plan will help kickstart their children's future education early, so they have less of a financial burden years later. But the long-term benefits do not stop just there. These plans also allow tax-free withdrawals when you take out money to pay for college. By getting started early, you can save a significant amount of money in future cash flow and tax savings. It does not take a lot to get started, but the power of compound returns can be so beneficial to you if you have time. The last one is to try to seek advice from healthy sources or qualified people. See, make a habit of being well informed about your money. They have a basic understanding of their earnings, what they own, and how much their investment costs. For many people, saving and investing money can certainly be intimidating and confusing. Luckily, there are plenty of free online resources to help guide you. Between finance apps like Mint and YouTube channels like ours, you can access this educational content on the go or from the comfort of your own home. So do subscribe to this channel. And if you're seeking someone to speak to one-on-one, such as a financial advisor, make a point to ask about the fees they charge. You should be able to be transparent about what their service costs are, as well as be clear on explaining your money and investments to you. Your advisor should be both a partner and educator for you. Okay, these were the 10 basic rules that you all should adopt in order to be millionaires. If you found this video helpful, do like the video and subscribe to the channel for more awesome content. Now let's wrap it up. I'll see you in the next video. Till then, peace out.